Hi, and welcome back to Web3 Compass. Currently, the crypto market is bleeding. Big news are coming out every day and it's hard to keep up. This is why today I want to do a FTX debriefing. If you have not listened to my last podcast episode, you might want to check it out because I will follow up on a few things. Today I also want to share my thoughts on the whole situation and explain why I'm currently frustrated with crypto. But let's start right in the beginning. Let's start with Alameda Research. Alameda Research was a quantitative trading firm of Sam Bankman-Fried, the CEO of FTX. He founded it in 2017 after leaving Jane Street. Jane Street is a proprietary trading firm, which means they are using their own money for trading. This might be interesting to know because it's hard to get in and they are not clowning around with clients' money because it's their own money they are investing. Jane Street is also one of the world's largest market makers. Sam Bankman-Fried holds a bachelor in physics from MIT. I'm telling you these facts because it probably leads you to the conclusion that he's quite intelligent, and I will come back to it later. So Alameda Research was also very successful in the beginning. They did Bitcoin arbitrage trading by using price differences between Bitcoin in Japan and US. And according to Forbes, they had margins up to 30%. The next step was that FTX was founded in 2019. It was a cryptocurrency exchange focused on derivatives. I got some sources saying that the Bitcoin arbitrage opportunity closed because the market got more efficient, but I couldn't verify that. And maybe also a disclaimer for the whole situation or for the whole story. There are not all informations public yet. I tried my best to verify everything I'm telling you today, but I might also have read false information. So if you know better, please let me know by commenting on the Discord channel or shooting me a DM on LinkedIn. But now back to FTX. 6 months after founding it, CC, the CEO of Binance, took a 20% stake in FTX for $100 million. FTX became very successful, especially with derivatives. And after a while, it also became a serious competitor to Binance. And according to Reuters, Binance was preventing further expansion of FTX by not cooperating, for example, by licenses and other stuff. So in July 2021, FTX raised $900 million at an $18 billion valuations from dozens of investors, and then they bought out Binance for about $2 billion. And also, according to Reuters, the sum was paid in FTT tokens, the token of FTX. And this will also be important in the future. The investors in this round included SoftBank and Sequoia Capital and some of the most famous tech investors. And here I want to criticize that they have not done a proper due diligence. And it seems to me that in the last month or also in the last years, there are a lot of cases. Maybe it's also because I'm biased and I'm looking only since a few years at the financial markets. But with Wirecard in Germany and now with FTX, some serious mistakes regarding the due diligence were made. I often hear that people are against professional investors and against short sellers. And I'm also not saying that they are always good. Some of them might be immoral, but they also have very important function. Because they do normally, I would say, they are doing normally proper due diligence and they are keeping the scammers out of the market. They are acting like a protection shield for retail investors. And also active funds or short sellers, they are also acting like a cleaning mechanism for the market because they are doing research and they are doing research in order to find scammers. And if they find them, they make a profit. Yeah, that's right. They make a profit and some people are losing money. But they help to keep the market clean. And the profit will help them to do this research also in the future. Of course, not all short sellers are white knights. Coming back to FTX. In September 2021, FTX moved its headquarters from Hong Kong to the Bahamas. And in January 2022, FTX raised another $400 million in a Series C, coming to a valuation of around $32 billion. Moving to more recent events. In the last month, a conflict between CC and Sam Bankman-Fried was boiling up. One possible reason could be that Sam Bankman-Fried was supporting the Digital Commodities Consumer Protection Act, which is like a US act which should regulate crypto and specifically DeFi. CC wrote in regard to the whole FTX meltdown in one tweet that he will not support people, and I quote now here, people who lobby against other industry players behind their back. It could have meant the Digital Commodities Consumer Protection Act, but it could also be something different. Because Sam Bankman-Fried was also a major donor to the Democratic Party and he also had strong ties to politicians. The whole situation really started at the 2nd November when CoinDesk published an article talking about the balance sheet of Alameda Research. The private report stated that as of June 30th, the company's assets amounted to $14.6 billion. $3.66 billion were unlocked FTT, $2.16 billion were FTT collateral, and $8 billion were liabilities. So you have basically the cryptocurrency exchange FTX having their own coin, which is centrally controlled. And then you have like a trading company using these coins as collateral in order to take up loans. As I said in my last podcast episode, I think it's also critical if like a cryptocurrency exchange has their own token from a conflict of interest perspective. Now, Caroline Ellison, the CEO of Alameda Research, stated after the report from CoinDesk, which of course was quite negative, on Twitter, that the balance sheet only reflects the biggest long positions. Maybe what I didn't state right now is that at August 2021, according to Yahoo Finance, Sam Bankman-Fried still owned 90% of Alameda Research. So he basically owns the cryptocurrency exchange and he holds a majority stake in a trading company doing market making for their coin and using the coin of the cryptocurrency exchange to take up loans. And another thing which has to be considered is that according to CoinDesk, Sam Bankman-Fried and Ellison dated. It also said they were like 10 people with the CTO of FTX and the director of engineering living together in a penthouse in the Bahamas. It also stated that all 10 are or used to be paired up in romantic relationships with each other. So as long as the relationships of other people are mutual and compliant with the law, they are none of my business. But here you definitely have a conflict of interest. You have like a quantitative trading firm doing arbitrage and market making, owned to a majority of the founder of a crypto exchange, using the token of the cryptocurrency exchange as collateral. And then you have the people, the CEO of Alameda Research and the CEO of FTX having a romantic relationship. Yeah, I think that Chinese wall was not really a wall. And I also want to state here, I did not know it. So I did not know about Alameda Research. Yeah, I also did not proper research. I had no FTT token and I did not use FTX, but I was really thinking about it. I totally bought the story from the news. I bought the story of this genius about this young entrepreneur going his own way and also how he dressed like Steve Jobs, for example, believing in effective altruism. And I come back to this also later. And also with all the people promoting FTX, I thought it was a serious business. So I won't blame anyone who used FTX as a retail investor. Maybe professional investors have to take other measures. Let's come back to the next event. After the report leaked, CC wrote on Twitter, "Liquidating our FTT is just post-exit risk management, learning from Luna. We gave support before, but we won't pretend to make love after divorce. We are not against anyone, but we won't support people who lobby against other industry players behind their back." Sam Bankman-Fried also stated then on Twitter, A competitor is trying to go after us with false rumors. FTX is fine. Assets are fine. Customers got afraid and wanted to withdraw their money or their crypto. And according to Reuters, users tried to withdraw $6 billion in crypto tokens in 72 hours. It had to come to a liquidity crunch. This means that cash or crypto is in short supply and demand is high. You can compare it to a bank run. The next major happening was that Sam Bankman-Fried called CC. CC then signed a non-binding letter of intent that Binance wants to buy FTX non-US assets. They want to help them and they want to help to avoid this liquidity crunch. Only 1 day later, Binance announced on Twitter, as a result of corporate due diligence, as well as the latest news reports regarding mishandled customer funds and alleged US agency investigations, we have decided that we will not pursue the potential acquisition of FTX.com. So this meant there was no help for FTX. Sam Bankman-Fried then stated on Twitter, "I'm sorry, that's the biggest thing. I fucked up and should have done better." It was a series of tweets and it ended, or one of the last tweets was, "At some point I might have more to say about a particular sparring partner, so to speak. But you know, glass houses. So for now, all I say is, well played, you won." Yeah, he definitely was relating to CC. And my opinion on the situation is, CC is not the white knight. He has more than a fair share in the whole situation. I think also he never really planned to go through with the deal. He wanted to humiliate Sam Bankman-Fried for their fight in the past. And if you look at billionaires, also the disputes of the billionaires in Silicon Valley, they all have a very high ego. But also, in my opinion, Sam Bankman-Fried is also not the victim here. He has the main responsibility. But CC is now playing on Twitter at least the role of the white knight, as the savior, and as the one who didn't want all this to happen. Yeah, in my opinion, as I stated before, he has more than his fair share in this whole situation. But let's talk about the consequences. FTT traded at the beginning of November at $25. And when I wrote here my notes, it was trading around $1.3. Also very interesting is the impact of FTX downfall on Solana. At the beginning of November, Solana was trading around at $30. And now, or at least when I looked it up, it was trading around $15. Solana, this is because Solana has strong ties with FTX. Of course, all cryptocurrencies dropped, but Solana had one of the highest drops. The Solana Foundation holds a lot of its tokens on FTX. And also FTX had major investments in the Solana ecosystem. Of course, you have to say in general, FTX, FTX US, FTX Venture, Sam Bankman-Fried personally, and Alameda did dozens of investments in the ecosystem. And this is also a little bit like a card house, but you could also compare it to the startup ecosystem where people or startup founders are investing in new startups and everybody invests in everybody basically. But they had especially very important investments in the Solana ecosystem, and FTX had strong ties with Serum, which is like an on-chain DEX for Solana. And according to the Solana founder, the community is working to fork Serum to restore the protocol without the involvement of FTX. You also have to know that Sam Bankman-Fried was a key backer of Solana. And yeah, since the Solana blockchain also got heavily criticized over the last month, at least here in the German crypto sphere, due to the halts and outages of the blockchain, I think the news are not very good for them. I mean, it's a blockchain that stops really a blockchain, and will Solana ever be able to recover? Yeah, I don't know, but these are not even all news. The I am sorry tweet was from 10th of November. At the 11th of November, FTX US and FTX.com filed for bankruptcy. At the 12th of November, FTX stated on Telegram that it had been compromised. There was a $400 million exploit. Was it a hacker or an insider? Or an attacker or an insider? I think when too many things do not add up, FUD is not only appropriate but necessary. FUD means in the crypto scene fear, uncertainty, and doubt. It has a negative connotation because it says, or people who talking about FUD are saying people are making irrational market decisions. And if you are involved in a crypto project, there will always be people who are saying, oh, this could never work. They are the skeptics of the project. But in my case, always when people scream FUD, it was more than appropriate. And people fighting the FUDs were often scammers. So I think we don't need less FUD, we need more FUD. Yeah, and if the ecosystem develops slower, maybe that's exactly what we need. Because with all these events, with Terra, Luna, and now with FTX, and maybe the mindset also needs to shift, that not everybody who criticizes something is automatically like a hater. Yeah, coming back to FTX. Let's talk about FTX and the backdoor. So Reuters also reported that $10 billion of customer funds have secretly transferred from FTX to Alameda Research. A large portion of that has disappeared. It is around $1.7 billion. Sam Bankman-Fried stated he disagrees with the characterization of the $10 billion transfer. He said, we didn't secretly transfer. We had confusing internal labeling and misread it. Now coming back to what I said before about the intelligence of this guy. So you have a very, very brilliant in a sense of like maybe academic intelligence or general intelligence or however you want to frame it, doesn't matter, who mislabeled and misread a transaction regarding $10 billion. Yeah, I doubt it. And when Reuters asked for the missing funds, Sam Bankman-Fried replied with 3 question marks. So as I said before, the son of 2 Stanford law professors with a degree from MIT, who worked for Jane Street, being incredibly successful for arbitrage trading, suddenly makes one mistake after another. Don't get fooled, people. If things do not add up, use common sense. Things are often wrong. And here, things are heavily wrong. Let's talk about Sam Bankman-Fried and effective altruism. So in 2017, he worked at the Center of Effective Altruism, and maybe I found a good explanation from Wikipedia, which says effective altruism is a philosophical and social movement that advocates using evidence and reason to figure out how to benefit others as much as possible and taking action on that basis. Yeah, in ideal case, it's very noble, and it reminded me of Stoicism, even though I might be wrong here because I'm not a philosopher and I didn't study it. But I thought very interesting thoughts, but probably too good to be true. So Vox, also very interesting in this regard, Vox published a chat between Sam Bankman-Fried and Kelsey Piper. Kelsey Piper is a senior writer for Vox and focuses on effective altruism. And here Sam Bankman-Fried, or in this interview, said, in regard to regulation, there's no one really out there making sure good things happen and bad things don't. Usually there's only one toggle, do more or do less. Yeah, just PR. And I'm quoting here, fuck regulators. They make everything worse. They don't protect customers at all. I say no, I strongly disagree. Regulation can be good, over-regulation probably is not good, but regulation can be good and is needed to protect consumers like myself from people exactly like Sam Bankman-Fried. Yeah, and please read the whole interview if you're interested in the whole situation for more context, because another quote from the interview is, she asked him, or he said to him, you were really good talking about ethics for someone who kind of saw it all as a game with winners and losers. And then he said, yeah, hehe, I had to be. It's what reputations are made of to some extent. I feel bad for those who get fucked by it, also quoting here, by this dumb game we woke Westerners play, where we say all the shibboleth and so everyone likes us. shibboleth. I hope I pronounce it correctly. And according to Merriam-Webster, it means a word or saying used by adherents of a party, sect, or belief and usually regarded by others as empty of real meaning. Yeah, I think to a certain extent he is right here. If you look, for example, in the rainbow press and you see what, let's say, some pop stars are stating. For example, I don't know who said it, but there was a woman who said, people who throw trash out the window are trash. So, yeah, of course. I think you can have a huge portion of agreement in the population if you state things which just make completely much sense. If you just say, I like pizza, for example. Treating other people bad is bad. Or treating animals bad is disgusting. And all these stuff. Or people advocating for climate protection and then flying private jets and so on and so on. But in this context where he was about all this effective altruism, this interview seemed to me like it was all just like a farce. It was all just a reputation he built for himself. Also, one thing I read for a short time, but I don't know where I read it, is that nobody likes to be wrong. So he has his worldview, and according to his worldview, or in general, people are acting right according to their worldview. And there are, of course, a few extreme cases or other situations where this is not the case, why people might act because of an addiction, how they act, or because of a drug or like a mental illness. But even by some mental illnesses, people think they are acting right and their worldview is right. But now damage was done and they should be held accountable for it. And I think also becoming like, let's say, a player and playing a game is not worth it because you are losing yourself. And I don't know if you can look in the mirror, because I think if you're saying, I'm not myself, I'm now like a player and I play this game and you're living like in your world, or you're making your world up, you probably can stick to your values. And I think this is important. Yeah, and let's talk about more maybe a factual level. Let's talk about Genesis Trading, which is a large cryptocurrency brokerage firm, which also did, for example, services for Gemini Earn. And they were strongly affected from Three Arrows Capital and had their large losses. They also now had a large exposure to FTX. They had $175 million locked in FTX trading. If you're interested in how the FTX situation affected Genesis Trading, I can only recommend the channel of CoffeeZilla, who did there an extra video on this. Now, some other things I want to mention in this whole regard. I had like over 20 pages of notes where I tried to put everything down, but now I just will spit some random facts about the situation. So, as I said before, Sam Bankman-Fried was donating to the Democratic Party. He had also calls with Gary Gensler, who was the head of the SEC, and he has a very influential family. All these things should be considered in the next things to come up. Let's talk about Caroline Ellison. She had some extraordinary tweets and, let's say, social media activities in the past. One of the things she tweeted was, "Nothing like regular amphetamine use to make you appreciate how dumb a lot of normal, non-medicated human experience is." You might have seen the memes about the FTX/Alameda research crew taking amphetamine. Another thing is that a famous interview of her came up where she was saying that she is using very little math to manage Alameda research, and she uses a lot of elementary school math. And furthermore, she thinks stop losses are a bad risk management tool. Also, the blog reported that there was like an old Tumblr post regarding polyamorous relationships and how you should structure them in like a hierarchy. Yeah, why I'm saying this is because At first, when I read about that all 10 people had been like a romantic relationship with each other, I thought it was to deface them. And it's not true. But in this regard, it might probably have been the case. Yeah. Also, lastly, her father is Glenn Ellison, who is like an influential economist and I think also like a professor from MIT. Yeah, I think the whole crew, also the CTO, they are all extremely smart, but this might have led to arrogance. Another topic which might also be worth our own episode is the promotion from influencers and also from financial influencers. Some of them made millions. It could have been that the millions have been in FTX stake or they paid them millions. But I think especially when you're like a financial influencer, those are not anymore individual people. So I'm like a one-man operation. This is also why my podcast episode comes so late. I'm doing this besides work and I'm earning nothing on it. But there are YouTubers which basically have a whole team. They are like a media company and they will not frame themselves like it, but it's the truth. And for me, it's important to notice that they are not experts, they are entertainers. Of course, not even professionals seem to know what they are doing. But yeah, I will be definitely more critical in the future. And also, one major thing is media. Coffeezilla had Marco Hodes, I think his name is, in one of his YouTube videos. And he has also, as far as I'm informed, like an investing company. And he found FTX also for a long time suspicious. And then he went to Bloomberg and they didn't want to print his story because they said it was bad for business. And yeah, it's so crazy because he also said that the auditor of FTX had his address in the metaverse in Decentraland. So the accountant of FTX had his address in the metaverse. And how crazy is it that Bloomberg did not want to print the story because they were more afraid to lose access? And now let's look also at the interviews of Sam Bankman-Fried. If you look at the interview of the New York Times, it's way less too critical. It's so crazy. And I think in general it's very critical when, for example, crypto companies or also other companies have like a large stake in media companies or also the whole stake in media companies. Yeah, they are building the public opinion. Yeah, this is probably also why we need decentralization. And then on the other hand, I'm so happy that we have these platforms like Twitter, like YouTube, blogs, and YouTubers like Coffeezilla. Because without Google, without YouTube, Coffeezilla wouldn't reach so many people probably. And also Twitter, how much they help to investigate further and how they collected the information. And it's crazy. And all the major news were there. It's totally different than probably in the past. The hot news were on Twitter and they came there directly from the platform. And even though it's not on the blockchain, it was somehow decentralized. And it was also somehow other than the traditional structure, because if you would have read the Wall Street Journal or the interview with the New York Times, it was, as I said before, way less too critical. And I don't understand it, or as I always saying, if things don't add up, something is probably not going right. Yeah, now the bankruptcy filing of FTX also was in the news because John Ray III, who is an US attorney and insolvency professional, who also oversaw the Enron liquidation. So he is then announced as a CEO, for example, as Enron, and was also now announced as CEO of FTX. And he said now in regard to FTX, never in my career have I seen such a complete failure of corporate controls and such a complete absence of trustworthy financial information. Some of the things in the bankruptcy report included that Sam Bankman-Fried often communicated with using applications that were set to auto-delete after a short period of time, and he encouraged employees to do the same. They had very bad cash management. Alameda Research gave Sam Bankman-Fried a personal loan of $1 billion. They had very bad governance. Some of the entities had no board meetings at all. Real estate was bought from funds of the FTX group for employees and advisors, and then it was recorded in their personal name. And this was my FTX debriefing. Now my thoughts on the whole situation. Last year I was drawn to the whole crypto space because I was interested in making money. I thought it might be a very great opportunity if you are young and you want also maybe to build something. This might be ideal to start there. And after a time, the money aspect became less important. And as you said, in the crypto scene, you fall into the rabbit hole. You think of the idealism of why Bitcoin was created, and you hear this whole narrative of how it could change the world and how decentralization makes everything better. But if I look at recent events, I get the feeling that it doesn't make things better, it does make the things worse. This is also probably biased right now, because I think there are some very great examples of how crypto could do things better, and also not only blockchain technology, but really crypto. Yeah, I also think I'm currently taking the DeFi Talents course from the Frankfurt School Blockchain Center, and I think DeFi is incredibly complex and unregulated. So a lot of transactions are legal at the moment, which would not be legal in the, let's say, financial markets. And it's incredibly complex. The normal market is even incredibly complex, but I think it's more transparent. Probably also not ideally transparent. And if you talk to people who really know the market, the best thing probably is to have like a buy and hold strategy, to invest in like an ETF and to know trading. Chances are high. Arbitrage opportunities, at least in the normal financial market, are very rare. And also regarding crypto, I think seeing all these protocols or companies getting insolvent, and all these effects when one player goes down, affecting the whole industry, I think probably the best thing is to have your crypto stored on a cold wallet. Not for everyone, but for me, and also probably for the majority of end users. This is the next thing, storing like crypto in a cold wallet. As it now is, it will never be for the majority of the population. It's way too complicated. And also in this regard, you have to say, where do you buy your crypto? You have to buy your crypto on an exchange. At least it's the most convenient way. And I know it was not always like this in the past, but you basically, the entry point is you buy your crypto for an exchange. And if you want to take your money out of the crypto ecosphere, you also get it out over an exchange. And you have basically a bottleneck. When you look at the whole ecosystem, the exchanges are a bottleneck and they are extremely centralized. Yeah, let's see how this develops in the future. However, I think crypto is here to stay, but it will probably take years to recover from this. I know there are a lot of progressions going on, and I also know we were already like in a crypto winter, but all these things, they are not doing good for the adoption of cryptocurrencies, and also they lead to FUD. And maybe this is exactly what we need right now. I also want to be more critical in the future. I would say my last episodes were quite critical. But real life use cases, even though they are existent, they are often missing in regard to the blockchain, but also in regard to cryptocurrencies. And it's a lot of idealism which is detached from reality. And I think idealism and reality must come closer together. Yes, I believe, as I said before, skepticism is more than important. And also the metaverse will take time. Maybe also one interesting thing is I made this episode about the metaverse, and I talked about my Oculus Quest 2, which is like the VR glasses from Meta. And yeah, they are lying around here. So I don't know if I'm the only one. Some people said it before, but I basically often don't find the time to use them because they are just not so convenient to use. For me, at least. They are cool, and sometimes I use them, but I think it needs to be way more convenient, and also regarding space. So for some games, you need a lot of space. Maybe I have to make another podcast episode about the metaverse, but bottom line is the metaverse will take time. And talking about time, now it's a time for building Web3, making this Web 2 even better. And I would say Web3 for me, at least in the future, it means for me that blockchain can be a part of it, but it does not have to be. Reflecting on a few things that Twitter, YouTube, and also Meta, they are giving people a voice and a platform currently. And it's easy to be against a lot of things, but without, for example, CoffeeZilla and him using YouTube, and this not sponsored or anything, but without that, a lot of things would not be possible. And also, an important question is always to ask, is this new system better, or do we need to make like the old system better? And I think there will be no Web 2 and like a Web 3. I think it will be something in between. There will be use cases for cryptocurrencies and for blockchain technology, but I think there will also be very important use cases for existing players. And yeah, you might have noticed it. I'm quite frustrated. I got a reality check over the last month. I was quite naive. I also think in regarding a career in cryptocurrency, doing like a podcast and talking so much about Web3, I think you at least think about potential career opportunities in Web3. When I think about a lot of the companies which are really making money, of course there are very good companies also, but like the very major companies which are very big, I think they have a lot to work on, to frame it this way. And yeah, I'm really interested on your opinion. I would love if some of you would come to the Discord channel and we could talk there. And besides that, have a nice day. Cheers.